Hi there guys, it's Joel here from Aussie Chart Trends. Today's market update is for Tuesday the 18th of December 2012. Today we're going to be checking out the asx200 and then we're going to take a look at the smp500. Before we do that though, I've just got to remind everyone that aussiecharttrends.com.au and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as any form of investment advice. I'm not a licensed professional. You need to make your own decisions regarding your investments. I'm just here to help anyone searching for a practical direction in today's markets. Okay, so firstly, we're just going to take a look at the asx200. Looking here on the hourly chart, going back to early June, we identified back here that we had a double bottom formation and that the markets were going to reverse. Now, ever since, we've held up against this support line here, this bottom support line, and the market has been fairly strong until we had this pattern up here, which indicated that we had a head and shoulders topping formation. We had that breakdown with our minimum expected target, and we actually exceeded that by a fair bit. Now you can see though that this long-term uptrend line was able to catch the markets, and we were able to hold here as an area of support. Now ever since, we've watched the asx200 rally on up past our old high of around that 4,585 area. We are just flirting with these new highs. Now we were talking yesterday about a symmetrical triangle pattern and that this would have a measured move up above this area. Now I would expect that this line here should put up a fight of resistance. And as you can see, all day long today we shot up to this area and then we travelled sideways for the rest of the day. So it is looking like that the asx200 may have a bit of a tough time getting over this area, and you would expect it because buying pressure has been coming in ever since the 20th of November, roughly, from early November or mid-November, that the markets have really shot up fairly quickly. So at this point, I've actually drawn a new line on the chart. If you can pick it, it's this line here. Now, just going to change the color to a blue neckline, just so I don't confuse everyone with all these lines on the chart. We may be looking at an inverted head and shoulders. Now you can see here, I've drawn the neckline just below this high here. I don't want to get too carried away with this peak here. As you can see, there's a lot more touches down here. So I've decided to draw this neckline sloping up on that inverted angle. Now you can see here, we may be looking at a left shoulder, a head, a right shoulder with their breakout. Now, as you can see, the asx200 after breaking out, we got an intraday back test, but we never actually got a back test on this area here. So I'm wondering whether the asx200 will eventually back test on this line, or even if we float around for a few days and then we back test either on this yellow line, which then would in turn meet this blue line here that we've got drawn on the chart. So we are at an interesting crossroad here, and we really do need to see the asx200 stay above this rising support line. But I think overall at the moment things are looking fairly good. If we were to zoom the chart back out again, and if we measure this pattern, we would be looking at a measurement of around that 4,730 level. Now as you can see guys, the asx200 has come up to a previous top and we are battling this resistance area. For now, we've got a bullish pattern and we've also got a bearish pattern in play. Now, what could that be? Well, since that we've rallied on up now up to this previous peak, we could be looking at a double top formation. I would love to see this previous high get taken out and this symmetrical triangle to meet its minimum expected target. And if we could come back down and even back test on this neckline here and then take off to the upside, I would say then that would be a really good signal. But we do need to be aware and very cautious when we do break old highs like this. So in saying that, let's take a look at the smp500, and I just want to explain the bearish point of view, as I didn't get a chance to do that yesterday because I was extremely jet lagged. Oh, one last thing. I do want to mention on the hourly chart here of the asx200, we had an inverted head and shoulders pattern down here with this blue neckline. We had that target get met, and then we had another inverted head and shoulders pattern that was hard to spot, but we picked it, and you can see here after breaking out that had a minimum expected move all the way up to that 4,595 area, and we got to that area. So there's two inverted head and shoulders patterns that have worked. Let's see if the third one can work. I think that there's a good chance that we may see a nice rise in the asx200. So let's take a look now at the S&P 500. Okay, looking on the hourly chart here of the S&P 500, which means each candlestick here represents 1 hour of trade. In yesterday's video, we were discussing that we needed to hold around this area, and that we needed to see the S&P bounce off this 1414 area. Now, we did get that bounce in last night's trade, and we had a strong rally up. I think it was about 16 points, so that was a really good signal. Now, if you haven't been watching the updates, we've been talking about this being potentially a left shoulder, a head down here, and a right shoulder with our handle pattern breakout. Now, we do need a confirmed breakout above this area, and in yesterday's video I was discussing maybe a scenario that if we did get a break above this area of around that 1435 area, or take out this last high here, we may get a rally up to this 1450 level and then come back down for a nice back test. And usually, technically speaking, the tech book does say after you have a breakout of an inverted head and shoulders pattern, a back test is the best spot to go long in a market. But obviously you need to make up your own decisions as to how you trade. I'm not here to tell you what to do. I'm just here to give you guys some education, and hopefully that you can benefit from it. So things are looking fairly good there. Let's see what the S&P 500 can do in tonight's trade, and if we can get over this area, it'll be an interesting pattern, because that would be pointing all the way up into the 1520s, 1530 area. So the other thing that I do need to mention though is what is the bearish outcome for the S&P 500 that we could be potentially looking at. We had this triple top formation over on this side of the chart here. We started around the 10th of September there. You can see that we had these three peaks. Now we were expecting that this red line here around that 1435, 1438 area, depending on where you draw this line, you can see that the market may be able to get over this area temporarily, even get up to that 1450 level, and then come back down and fail at this level. We may be looking at a very large head and shoulders topping formation that we still need to keep on our radar. Here on the daily chart, you can see I've just drawn this blue neckline. We may be looking at a long-term pattern, a left shoulder, a head, and a right shoulder forming. So if we do fail to get over these levels, and this inverted head and shoulders pattern does fail, well, we've got to keep in mind that bearish pattern, because long term, if we were to come down and take out this rising level of support, the markets would be in a fair bit of trouble, and we would be definitely heading back down to around that 1100 area as an area there of support. Looking at the long-term perspective of the S&P 500, well, we have been going up now for a long time. We've been going up since January 2009, and we've got this big boost up with all of our stimulus, and we are definitely at a crossroad now as to where the markets are going to go in general. So if we do get that break of this blue line, or even if we get this break of this rising wedge line that we've got drawn here on the chart, you'd expect that we would have a measured move to the downside, and that would cause us a lot of grief in the marketplace worldwide. So that's just something to keep in mind. But as for the bulls, you can see that we do have plenty of room to get on up to around that 1600 area. Going back even further, all the way to April of 1998, you can see that the S&P 500, every time we've hit around that 1600 level, we've come back down into a bear market. We've rallied on back up, back down into a bear market. Now we're rallying on back up in what appears to be a rising wedge pattern. I would say, why not just finish the job off and come back up to this level here. But overall, I think that the S&P 500 is looking quite healthy at the moment, but we just need to see confirmation of that break of that high boundary line from our triple top formation. Guys, that was the detailed update that you didn't get yesterday. Thanks very much for watching, and I'll be back tomorrow with the free daily market update.